Everyone's chasing the headlines right now, but beneath the surface, the markets are making moves that almost no one's paying attention to. XRP here is under serious pressure. Bitcoin just had a $1 trillion milestone, and the broader market has been shifting in ways that deserve a deeper look. If you want a sharp, no-hype breakdown of what's really going on across crypto, the broader stock market, and gold, you're in the right place. Real quick before we dive in, none of this is financial advice. I'm just sharing what I'm seeing in the markets so that you can take this all in as a bigger thesis for yourself and do your research and make your own decisions. Okay, so going back a few weeks, we've got Stuart Alderoty comes out a few days after Brad Garlinghouse. So Stuart Alderoty is the chief legal officer of Ripple. He said they're going to drop the appeal. SEC is going to drop the appeal without conditions. And then he straight up said, this should be my last update on SEC versus Ripple ever. I've heard some back and forth online about, well, maybe that he's going to be wrong. I feel like this chief legal officer coming out saying this, we can probably bet on this. Going forward, regardless, so that was March 25th that Stuart Alderoty said that. We've got XRP is not been doing so well over the last little over about 5 weeks, 6 weeks. It's down. Despite this, there is something really cool that just got announced today. Today is April 8th, Tuesday, April 8th. So Ripple agreed to acquire prime broker Hidden Road for $1.25 billion. And this is one of the biggest deals in all crypto history. So we've got, before that, we had last October, although this recently got finalized, Stripe closed a $1.1 billion deal for Bridge. That was recent, but that was, and as of last October, that was the largest crypto deal ever. And then more recently, we've had Kraken to acquire NinjaTrader for $1.5 billion. From what I can find, this is the largest deal in the crypto space ever. But Ripple's deal is very close to this size. So this is a really big deal going on here. And just as a little background on Hidden Road, this is a really big move. Hidden Road is a prime broker, which basically means it helps big trading firms do everything like executing trades, borrowing money, managing risk, moving assets between markets like crypto stocks, FX, foreign exchange. These firms have to put up collateral. The firms that are using Hidden Road, they have to put up collateral to back their trades, like when they're leveraging, or even if they're doing high frequency trades with no leverage, you still, because of trade settlements, you have to back it by collateral. And that's where RLUSD is going to come in. So what Ripple announced is that they're planning to let institutions use RLUSD as that collateral so that they can trade across multiple markets using just that single RLUSD instead of moving cash around. It's going to make things a lot faster, more efficient. It's all going to be handled on the XRP Ledger, and it's going to make RLUSD a part of how money is moving even through these more traditional outlets. And another cool thing about this is that they're looking to the next phase with tokenization. And I've talked about this in previous videos, but just quickly, tokenization is just turning real world assets like dollars, bonds, real estate into digital tokens that live on the XRP Ledger. And with this, instead of waiting days for a wire to settle, the tokenized ownership of the assets could be moved instantly anytime. And it can also be through these traditional, larger prime institutions. Since Hidden Road is already connected to over 300 firms and exchanges, Ripple now has a direct route to bring tokenized assets into the real world, not just as a concept, but actually being used by these large institutions. It's not just about growing their asset base of ownership. It's also about laying down the rails that money is going to be moved on in the near future. Okay, another development, the XXRP ETF, which is a 2x XRP ETF, has just gone live. Today's first day. This should be interesting. This is just adding more avenues for investors on traditional brokerages that may not have access directly to XRP, could invest in exposure to XRP. I've got someone weed eating just outside of my window, so bear with me. This may be a little loud. But in the meantime, if this breakdown is helping you at all, be sure to hit the like button. It's going to help the channel tremendously, and it also helps get the word out to other people like you. I want to add to the fact that XXRP has just started trading today is very interesting, because the first thing that stood out to me about this is that these ETFs historically that I've seen like these in the past, they do have a tendency of, they're obviously not going to be able to pick perfect bottoms, but when we look back at one of the original leveraged ETFs, SPXL, which is 3x of the S&P 500 long. So it's a bull. So S&P goes up 1%. SPXL typically will go up very close to 3%. S&P 500 goes down 1%. SPXL will typically go down 3%. Their inception date was November 5th, 2008, very late in the Great Recession. And the bottom ended up happening, if I remember correctly, close to the March, April time frame in 2009. But SPXL was opened within a few months of the bottom. I find it interesting that XXRP has also been opened when it has been. We'll see if they end up getting close to the bottom. Only time's going to tell on that one. If you like these quick, digestible breakdowns, be sure to subscribe, because I'm going to be putting out more just like this as the market turmoil keeps playing out. So going forward to broader crypto, we've got the total market cap of all crypto was peaking around the 3.65 range, and as of today, we're down at 2.43 trillion. So the total crypto market has dropped from the peak about 32%. And when we go to Bitcoin from its peak is down about 25.8%. And that peak was around 106,000 in mid-December of 2024. Ethereum has just been crushed. Ethereum's peak was around 4,000, a little over 4,000 a week into December. And since that time, Ethereum is down 61.6. So the broad crypto market has done poorly. XRP's actually relatively done pretty well given all of this. With all of these drops, tons of money has been flooding into stablecoins. So when we look at the market cap of Tether, of USDT, just since last November, the market cap has gone from around 120 billion to today it's at about 144 billion, which that's a 19.6% gain since November. There has been about $44 billion have flooded into USDT. And then also we look at USDC, another US dollar stablecoin. It's increased about 25 billion in market cap, which is actually almost a 100% gain, almost doubled. And then RLUSD has not been around near as long as these others, but you look at its market cap was nothing back in December, and it's increased, much smaller than these others, but almost a $300 million gain. So a lot of money is, people are selling their crypto and putting it more into these stable coins. Now on the front of the S&P 500, we've got a big drawdown recently. So the peak was around the 6,100, 61, very close to 6,150. S&P topped out. And as of right now, it's up a little over 1% today, but it's at the 5,120 range right now. So it's down well over 10%. 10% is historically called a correction. And then when you get a 20% from peak drop, that's when you enter bear market territory. Let's look at some of what's been pushing this and leading up to this. And I've actually been talking about this for a long time now, but something you're not going to hear in a lot of places is about CEO departures. And what just happened in 2024, this didn't get reported until January of 2025, but in 2024, this firm, Challenger, Gray & Christmas, has tracked CEO departures since 2003. They showed that CEO departures hit a record for 2024. It's never been that high. December 2024 was the highest of all time. So despite the market just kept inching up, this has always been a strong indicator of some type of a pullback. It last was hitting records in 2020, and that preceded the big volatility that occurred in March 2020 during all of the travel restrictions. I've been pointing these numbers out for quite a while now, and it's going to be interesting to see how they play out and what's actually coming ahead. Clearly, a lot of CEOs didn't like the writing that was on the wall, and they were leaving in mass numbers throughout 2024. And typically, this is people wanting to protect their legacy. They leave on a high note. It's like a MMA fighter retiring on their final win. It's like, let's get out before things start tanking, and then my legacy is tarnished because I left after the company's stock started tanking. We've got Warren Buffett right now sitting on over a 300, this article is very recent, but he's over a $300 billion cash pile. And people were criticizing that just a few months ago, saying how dumb it is to be holding cash. But now that move's actually looking like a smarter move. And I question too, what is he seeing that other people may not be seeing? We've also got across central banks all over the world are net buyers of gold. The purchasing of gold is larger right now than the selling. So you look at this chart here, you've got the light blue on the top, that's the gross purchase, and then the dark purple on the bottom is the gross sales. So this is across all central banks. People are buying up gold left and right. We've got 10-2 treasury yields. Look, these gray bars here, this is another data point that I've gone into quite a bit here and there. The dark bars represent recession. So the last one we had was in 2020. And what you typically see preceding recessions is you get the 10-year treasury yield minus the 2-year treasury yield. That number dips negative. And so it had recently dipped negative starting in summer of 2022, and it had stayed there in the negative range until summer of 2024. So 2 years of an inverted yield curve, and now it's coming back positive. And this typically coincides when you look going negative, coming positive, recession, going negative, coming positive, recession, going negative, coming positive, recession. It's just over and over and over again. And we're here. We still have no official recession. We'll see. My personal opinion, as I've been saying now for a while, is that there will be an official recession marked coming soon. We've also got Survey of Consumer Expectations, SCE, Household Spending Survey. We've got consumers expecting this. At August, they believed over the coming year there would be a 4.4% inflation. And now, just most recently in December, they're saying 4.1, which is well above the long-term average in the 2.5 range. We've also got buybacks have been steadily slowing, so companies have not been buying back their stock. When big corporations are not buying back their stock, that is big money making big decisions. We've got VIX. The VIX is the volatility index. It's currently at the 46 range. That's high. It has not been this high since, not one single time. It has not been at a sustained level like this since the volatility of 2020. And prior to that, the last time it had been at this level is all the way back during the Great Recession. I see all of this as signs that people need to be extra cautious right now. And I was showing you all the gold numbers, what the central banks are doing. We've got gold continuing to perform pretty well. It's had a small dip recently. This is a gold ETF, GLD, the Spider gold shares, but it had peaked close to that 288 range, and now it's down less than 10% though. So it's still beating the S&P even with a bit of a pullback. But ultimately, you've got lots of people, you've got lots of entire countries, central banks running to cash and running to gold. I was talking to some people just the other day that were saying, oh, well, we've had a little pullback. This must be a great time to buy. I'm curious, just everyone's take on this. What is your take? Do you believe that this little correction is all we're going to see and it's just going to be up to greater heights? Or do you believe this is something that we need to be extra cautious about? Ultimately, I'm going to keep digging into this stuff. And especially in volatile times like this, I'm going to be putting out more of these just kind of market pulse sort of videos. So be sure to subscribe so you can catch all of those. And If you want to go even deeper, be sure to check out this next video of mine. YouTube has custom picked it just for you, so you definitely want to check it out and see what all I've got to offer on this channel.